Amnish Aggarwal, Head of Research at Prabhudas Leeladhar, talk about what the trading day ahead is going to look like. Amnish, hi, good morning. Good to have you on the show. Just wanting to understand how is it that you're navigating through these volatile times? What's the message out there for investors, both short as well as medium to long term?
Uh, Hi Aisha, good morning. If you look at say past 5-7 days, I think a lot has changed because earlier there was a lot of, you can say, geopolitical uncertainty, which for the time being has taken some sort of a pause. And I think the biggest thing which has resulted in this sort of a turnaround in the markets in the last couple of days is the uh, election results, particularly in the North Indian states of Haryana, because the political uncertainty for the time being has now taken a back seat, and it is now believed that the you can say the probability of now this coalition now continuing and the fact that the reforms will continue and the capex in the economy and all those things will continue. I think that that has again taken a front seat, and that is why if you look at say some of the stocks which are into the capital intensive industries and all, I think they have actually bounced back very strongly. So I think in the near term, I think it is what it is driving the markets. 2Q, I think earnings are not going to be anything great, and all eyes are on actually the coming quarter festival season, what it holds out. But definitely for the timing, I think I don't think we are going to test the bottom we tested a couple of days back.
Okay, fair enough. Let's also get in a sense from you as to what the outlook is, Amnish, when it comes to some of these auto stocks. We had the auto sales numbers as well that came in. What has been your assessment in terms of how that has panned out?
You see, auto actually, if we dissect it into two, three baskets, for example, two-wheelers have been doing better. Most of the two-wheeler companies, they have been giving you double-digit kind of a volume growth. And with the expected revival in rural demand, I think the auto two-wheelers they should continue to do reasonably well from here on. Although the valuations now they are not like what it used to be 6-8 months back, but some of the names like for example your Hero or TVS, I think from here on also they look reasonably good. Now, when it comes to PVs, I think PVs as an industry is not doing well from the last 6-8 months, except maybe M&M, which is still giving you double-digit volume growth. And with the revival in tractor demand also, I think that this is an interesting stock to watch out for. I think overall autos should be mixed. One needs to be very, very stock specific. And going forward, I think with the listing of Hyundai and even your demerger in Tata Motors, I think you will have two more PV players. So I think it is going to be quite exciting times for the auto as such.
Oh, yes, it most certainly will be. And how have you assessed the kind of moves that we've witnessed within the entire metals basket? That China factor has been fairly critical. You had that stimulus that came in, and then the fact that there was nothing fairly incremental that sent a lot of these metal stocks in an absolute tizzy. So it's been awfully volatile for some of these names this week. What's your assessment on metals? Where is it that you're finding comfort, Amnish?
You see, metal stocks had gained primarily because there were expectation that China's stimulus will increase the metal prices. Because if you look at the last 2-3 months, the prices of ferrous metals they have seen, I would say, close to double-digit correction, whereas your aluminium is still holding on. So I think with no big gains in visibility from the China stimulus, I think the ferrous stocks they have taken some sort of I would say pause or a beating in the near term. However, if you look at say medium to long term, I think two stocks which we have been liking. One is Jindal Stainless, which is not directly linked to the ferrous because it is into the stainless steel segment where the growth rates are more steady, and the second one is Hindalco, which seems to be a more kind of a structural story with the increasing usage.
As well, which are going to be in focus this morning. And there was that fear about Star Health data leak. The management did clarify that this is not going to impact their operations in any which way. But don't know, maybe you could see a sentimental reaction coming in on that stock today. Other than that, of course, we're looking at the strength in pharma, the kind of movement that you saw in ITC as well as Nestle both. Amnish, you think after some of the quarterly updates which are trickling in from FMCG players, hinting at a slowdown, at least it was pretty prominent by Dabur, you think FMCG could very well, get into some consolidation as a sector, or you still think there could be some outperformers and outliers within that?
If you look at the quarterly updates from FMCG companies or the commentaries in general, so the commentaries have not been negative. If you look at last 2-3 quarters, the rural demand has been picking up, and for most companies, the rural growth now is in line or ahead of the urban demand. Dabur was, I would say, one of case due to some seasonality and some sort of a trade destocking which they undertook as per the update. Now, if you look at the sector in general, I think one thing is very clearly playing out. The growth rates are picking up, but at the same time, the operating leverage or the margins might not increase because last year the margins for most of the companies in the sector had gone up. And I think the way the stocks rallied in the last 6 months by anywhere between 30 to 40%, I think if you look at particularly in FY26, there is hardly any upside in any of the FMCG names even now. So I believe that from here on, there will be, you can say, minor correction plus a bit of consolidation in the stocks before they make the next move. But definitely the kind of move we have seen in the last 6 months, where most of the stocks would have risen by, say, 20 to 30%, barring, say, a few stocks here or there, like, for example, Nestle. So I think that that is something which is unlikely to materialize. So I think at the current junctures, we are not very constructive on most of the, you can say, staple names, but on lower levels, something like you can say your Britannia or Nestle is something which we can look at.
Sure, let's get in your take as well, because we were talking about that dichotomy between the frontliners and the broader markets, and that how they managed to hold out after seeing quite some carnage. The broader end of the market was comfortably in the green. Just want to ask you, across the board, anything that really stood out within the banking space or the FMCG space in trade yesterday from the mid caps?
Have been actually butchered across the board. If you look at, say, last 3-4 days, there was maybe a week. So mid cap actually came under a lot of pressure. Because if you look at, say, purely the numbers, the large number of small caps and mid caps, they were trading at even at, say, 60-70% premium to where some of the large caps were. Because if you look at, say, Nifty or, say, top 100 companies, there will be multiples on a very broader consolidated basis. They have not moved up. So I think this sort of a correction was something which was expected and it has happened. Now, I think going forward, it will be very, very stock specific. So some of the names in, you can say, I think it will be very, very broad based. I will not single out any particular sector. May it be consumption space, maybe auto banks, maybe you can say some names in your capital goods. So I think it will be very, very stock specific across the board. Wherever there's now value in the stocks, wherever the growth rates are good, we will see some of these stocks bouncing back.
From you, Amnish, as to what your assessment is from the latest observations being flagged off in the Bernstein note, would you agree?
You see, as I said, that lot of now, you can say, you see, valuations are not overly expensive, but they are not cheap either. For example, you look at, say, banks, you look at, say, some of the tech stocks where people are positive about, but there are pockets of market or there are sectors where there is clearly a fraud and we might not get the kind of returns we have made earlier. Now, you can say the second part is that a lot of optimism is being built into that 3Q is going to be big from the viewpoint of consumption, and that will actually be driving the economy, where I have got some serious doubts. The kind of upside we are factoring in, if that doesn't materialize, then we could see downgrade in earnings happening as we go along in the next 3 months. So that is why I think one needs to be cautious and one needs to adopt a much more stock specific approach than what we have seen in the past 6 months.
Nuresh, for joining in and sharing with us your thoughts. Those are the pre-open rates, which are...
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.